So on a broader note, we want to look at when market is an impulse leg, what constitutes resistance in impulse leg, especially when there is no notable resistance. For example, SAU USD that is trading up continuously. How do you know when price will begin to make correction? It looks almost impossible to know, but when you look back into the structure of the market, you'll find out that every correction is a retest. Every correction you see is a retest based on the structure of the market. There is no correction that wasn't a retest. So I have a couple of evidence to back that out in every pair. So we decided to use SAU because of its volatility and how fast it moves. So now we need to look at, okay, 4 hours, look on a broader term from July. Let's see the price action from July till the current month. So we had a previous structure. Then I wasn't pleased with that structure. I need to look back holistically into the structure to see if it's a sincere structure. And what most times leads to trade loss is an insincere structure. When a structure is not sincere, when a structure is not sincere, you try to draw a structure to suit your feeling, it ends up running into loss. So we look at this from a very sincere perspective. Let's start from July. We have a break of structure here where price formed a retest. Then we have here a retest to a broken support structure, and we have a break of a resistance structure, and price returns on demand as support. So we're going to take our SR and we put here, and we make the top our RS. So subsequently, we'll be changing this character to see how we can get an ascending trend line through the structure of the market from previous data. So now we have a price uptrending, and we got here break of a support structure. Price came here on retest, and this becomes another RS. So we're going to clone it. We should have called it a retest candle, but subsequently we'll get that done. So these are all RS where resistance becomes support on break of structure, and we took out the wicks and focus on the body of the candle. So this chart only focus on the body of the candle, no wick. What does this mean? If a body of a 4-hour candle closes above this line, break and close, you go long. If it breaks below, you go short. It's an order. So if you're executing this order, then you have to watch. Then we have the structure here, breakout from the supply roof. The breakout from the supply roof becomes what? So we have at the top, at the bottom, we have at the bottom a demand floor, and at the top we have it as a supply roof. So this is the function, and we have this as a breakout candle. These are all breakout candle. A breakout from the support structure, this is a retest candle, and also a breakout candle is here. This is the candle that broke the structure. So we also bring it here. We want to find candles that broke structure, either break structure of a support structure or break structure of a resistance structure. We want to know the candle, and we want to see that candle return as retest. This is a candle that broke the structure. What structure was broken? A supply roof. So break of a supply roof, price returns on demand. So as price broke here, we did a consolidation. Then the consolidation phase started. And normally what we have in the market is impulse correction, and consolidation. And in this phase, you see the market began consolidation. You can see the channel, and you see the breakout where we have the roof and the floor. The market played actively, giving you the roof and the floor. So for every time price touches the roof, it's a sell, and price touches the floor, it's a buy. It's a consolidation. After the consolidation, price makes up what? A new rally. Look at the consolidation. The roof touch one. So let's get our circle box. You can see it. So I decided to use this descending power channel to demonstrate it, and also catch a 50% retracement of the descending power channel. So we have here consolidation build up after a heavy rally, where buyers and sellers are negotiating which way to go. But because we are on impulse leg, those on impulse leg will always win those who are on correction. That is the sentiment of the market. So it's usually like that. So we are saying market structure, we need to look at all the chart patterns, all the patterns that formed along the line, and the other special candle formations where we see hanging man, where we see bullish engulfing, where we see bearish engulfing, where we see teaser tops. And gravestone dodges, we'll be looking out for those special candle patterns where we can use it to add to to the structure that the price have created in the course of its journey. So we're looking at this a descending parallel channel where market is consolidating. This is a consolidation phase. So spotting market in phases is very important. Impulse correction and consolidation. They are the three things we expect in the market. Impulse correction and consolidation. So you have an impulse leg. After a heavy impulse leg, market consolidates. A breakout from a consolidation in the form of a descending trend line, open up a new wave of impulse. Another impulse leg, a heavy impulse leg. Market came here, consolidation. So right now we begin to see some slight deviation. So we have here resistance structure, resistance from break of a resistance structure. Price came on demand and played for a while, got rejected, and sold back and returned to the supply phase. And when they return to the supply phase, you kindly change your bias from buying to selling, as all sell are found on the supply phase. This strategy is called demand and supply. It is demand and supply rule. So now we see it and we see it play out actively. Now price returns from demand to supply. So on supply, what do? You keep only a sell bias. So for every time price come to the sell roof, all you think is what to do, what is sell. There is nothing else that come to your mind other than sell. And when price came to the roof, we sold out. A return again, we sold out, building a sell profile along the ascending trend line. So a breakout from the supply roof returns price was on demand, and that was why when price came back here, price respected the structure and made its way up. But how do we know that price is going to stop here at 2,789? There is no way anybody could have figured that out. But we have a previous resistance structure from here, this price action. When you look, you will find out in the back that we have a price action that is showing us a resistance structure. This is a resistance structure. After price pulled out from a resistance structure, price tried to buy, but price couldn't buy. For any reason he didn't buy, we look back here to find data. So if you are looking for data, why upswing should not continue, you look back. You look at the price action here. Like we look at the price action in this place. After price pulling out from the supply roof, price pulled out from a supply roof. On technical, we expected a heavy swing, but for any reason, due to lack of liquidity, we didn't get a swing of this kind. So the only way price stopped here was to look back and see where can you find a previous resistance structure. When we look back here, we find a resistance structure here at this level, and if we clone it, because we already have a psychological ascending trend line at a specified angle. If you clone this, you'll find out that this remains a midterm supply roof from this structure. And you see that this line, this ascending trend, the angle is the same. When it comes here, it's top price. Now, if we are concerned, now price where we pull that from a supply roof, now price on demand, will it continue to buy? In order to know this, you also bring here and check where do you have the previous resistance structure. It's here, and the price came here exactly and sold off. So this is how you can spot a resistant structure in an uptrend market where there is no available resistance. Because on technical, you cannot find any resistance, makes it impossible for you to think that price will drop from here. But in order to know this, you look back. You look back and ask yourself, where was previous resistance to upswing? The previous resistance to upswing was from this price action in the month of September. And when price was trading in the month of September, after a breakout from the supply roof, now we're on demand. On technical, we should trade higher. But price couldn't make it. Now the big question is, so what is the probability that price will? You look back and ask yourself, where did price resist in the past? This is where you have your resistance structure. On cloning the ascending trend line, we use only the body of the candle. The body of the candle, we are interested because weeks are confusing. So when we hold the body of the candle responsible, what we are looking for, break and close, body of a candle, 4 hours time frame. So if a 4 hours time frame break a resistance structure, now price sits on demand, then we expect that break and close on demand should give a bullish rally. Now the question now becomes, will the rally continue to buy because there is no resistance? All we do is we look back and see where we have a previous resistance to upswing using the same angle of inclination. The angle is the same. That is why you have what they call here angle of trade. So this concept of angle of trade, a lot of people ignore it. They don't know what it means, but it does means a lot because every market is calibrated, whether you like it or not. Market is well calibrated. So even market makers know where they will sell. After building liquidity on consolidation phase, they know when to sell and they know when to buy. So they can even calibrate and have a particular figure. So that is why you see when price reaches a certain level, it drops instantaneously and you'll be asking, what made it drop? There are a lot of others. So you see, most institutional traders already know that the next supply roof rises on this resistance structure by holding this trend angle responsible. What does this trend angle do? It holds the crisis of SR becomes ROS on multiple times. So it becomes a psychological ascending trend line where we hold responsible for future drop in price if price gets to the supply roof. So what happened here is we have here, which we already explained earlier, a break of structure, retest one, retest two, the body of the candle form an ascending trend line. When price came, it broke resistance structure, return on demand. They couldn't buy because we have, when we look back, we have a top layer resistance structure holding price in the month of September. And when we come the month of October, now we break out from a supply roof. Now price return on demand. On technical, we should have been going up, but due to no liquidity, then we look, okay, in the absence of liquidity, will this price, where likely is it going to stop? Where is the next available close of a 4 hour body candle using this trend, which we cloned? You'll find out that price stopped here 2,789 into 90 and it's making its way down. So this is a strategy we developed in-house and we decided to share it because we know it's very insightful and it's just for educational purpose and enlightenment on how to analyze the financial market like a professional. So what we do here now is the market hit a supply roof here. It hit a supply roof not by coincidence. It's from the past structure which we got in the month of September. The month of September resistance structure was got from what we got in the month of July. So everyone looks back. Everyone looks back. So the price action we got here for sell rejection, we got it from the month of September. And September got its price action rejection from here. And we have the window open. We have a top layer resistance structure which is here. So in the future, if rally resumes, the biggest and the most outstanding resistance structure we have is at this level. So making it possible for gold to trade above 2,840 into 2,854. So this is possible. So in the future, if we break out from here, our returns on demand phase, because right now the market is on supply. It's way, way, way on supply phase right now. After a breakout from after rejection from a resistance row. So the market is still have to make a way. So, but first of all, we look at another demand structure to see on the mid-term if there are other demand opportunities, which you will see from the breakout from here. After price touch the roof, we have a price retest again drop, and that forms a descending trend line. That descending trend line was what brought price back. So on retest, on break of a descending trend line, price has reacted, keeping markets from a bearish to bullish, right? We switch from supply roof to demand. See, price is trading below. Trading below is on supply. Now break up from a supply roof, price returns on demand. So here we're on demand. So at this place now, we bring here demand. So what this means is that uptrend will continue until we get to the supply roof. So we look at what are other multiple confluence we have. Confluence are what gives greater probability to upswing. And here we have a support structure. Support structure in the form of ascending trend line. If we pair it together, we see why price has reacted actively on the floor, which I call a demand floor. So on this demand floor, you can see the push. Here we have a support structure. After a break of structure, a broken resistance structure becomes a demand floor. Price returns on demand. After forming two successful touches, we have an ascending trend line in way of demand structure. With a three touch, price return close of Friday to respect the same structure in the zone of 2,734, pushing market into 51 before retracing into 49 close of Friday. So what we expect is that we have double confluence at this level. A descending trend line meets an ascending trend line. At the point of confluence, it was a buy impulse. So that impulse leg may continue to move until it goes back to retest the roof. What roof is that? A broken support structure. You can see here, after price breaking from this roof, price automatically switched from supply roof to demand floor. Now broke the demand floor. So we have to go back, retest the broken demand floor. Possibly if that happens, then you could be seeing a move. This is possible. This is very much possible. It's on the card. So until we break this ascending trend line, then we'll now see ourselves come down here to retest here. So this is what you have on the card. So it has to be layer by layer, no assumption. For whatever it does, we look out for the consequences of every action. So if price returns here and break this ascending trend line with one, two, three, four touches, then what we should expect is that price should go down more. So it makes sense to see SAU going below 2,700, but that will not come cheap. That will not come by assumption. That will come by structure, interpreting the structure and what the structure does. So to the downside, we also have a catch where price after consolidation between buyers and sellers and they broke out to the upside, retested the roof of the channel and the price have left. On technical, I expect that price should return again to test the roof of this channel. On technical, I expect that to happen. And if that happens, that sees gold below 2,500 per ounce. So nobody can tell if it's possible that gold will continue to have this fall up to this level. But if we are following this structure, price comes here, it will be a retest. This is going to be a retest zone for for a buy. So the breakout from this structure puts gold on demand from a supply roof to demand floor. You can see the channel have a roof and a floor. This is the roof, this is the floor. Every time price touch the roof, they sell it to the floor. It comes to the floor, they buy it to the roof. It comes to the roof, they sell it to the floor. A consolidation in a descending trend line. So this consolidation price broke out. What did it break out from? It broke out from the supply supply roof to use the supply roof as a demand. Besides, the trend is bearish. This is a bearish trend. So one of the things that pushed this thing was we pick another price action where we got we have another break of a beautiful break of structure from this level. We have here support structure, break of support structure, retest, retest, retest. So in the future, I expect this to happen again. This basically for educational purpose to understand the structure of market and interpreting the structure of market to determine where price movement will be. So this is the essence of this training. So you see here, you have here support structure, break of support structure, retest, break of a resistance structure, retest, break of a support structure, and the price played around retest, broke the structure again, continue to play. So on this scale, we call this a psychological ascending trend line. It's a psychological ascending trend line in the sense that we look when price is trading above it, we keep a buy bias. If it's trading below, we keep a sell bias. So for every time you see price traded above it, we look for a buy. Here, what do you do when price return here? We bought. When price return here, what did we do? We buy. When it returns again, we look for a buy. All we are looking for, if it breaks, then we wait for it, test and sell. A break of this structure, consolidation, what happened? We return here, sell. So we have an ascending trend line 4 hours, holding us and guiding us actively in the market. So we have here now resell. We have here when it come here, sell. When it broke the structure, what happens? We return from supply to demand. So it's a switching phase. The line has dual function. It can function as a demand, it can function as a supply. So the rule is to see is price trading above the line or below the line. If it's trading above the line, then we'll call it demand. If it's trading below, we'll call it supply. And for every time you see it, it has lived up to its name. So what we see here is that this is the demand flow. And when price return on demand, what happened? Price has bought. It bought on double confluence. What double confluence? A descending channel, a consolidating descending channel. This is a channel descending, consolidating. You can see the consolidation, floor roof, floor roof, floor roof before the next impulse leg. So it came here what on double confluence, an ascending trend line meet a descending trend line, boom, impulse continuation. So what we see here is that we have this now this becomes our new floor. So we want to change the color, so we will hold this responsible in the future. If price plays into this nest, ladies and gentlemen, do not hesitate to buy. The market is coming to a demand. So if it comes to your demand, what do you do on demand? You buy on demand. You don't need caution, you don't need precaution. You take your risk because market has come to yield your value. So the area of values are usually on the floor and on the roof. So it makes a whole lot of sense from technical perspective, from precaution perspective.